How do you make money when the stock market is weak? Well, there are two primary ways to do that, and I will tell you how. Plus, many of you concerned about whether there is more to this stock market crash to come. I will give you my analysis on stocks, commodities, crypto, and interest rates. And finally, we're going to look at the day trade of the week on AAOI. So how do you make money in this kind of a market? One that is trending down. There's primarily two ways to do so. We've talked about this in the past, but with there continuing to be weakness in the market, I think it's a good idea to go over these again. So, two things that you can do. One is trade with the trend. The trend is down, so buying inverse ETFs is going to work well, but you need to know how to do that. I'll show you in a moment. And then second, trade alpha stocks. I will show you what an alpha stock is and how to take advantage of that. So let's jump first to this idea of trading with the market in terms of inverse ETFs. So in the last 10 or 15 years, we've seen the rise of exchange traded funds, and there's a lot of funds that move opposite the stock market. And some of them are leveraged, so they move proportionately in a multiple to the market. So you can have a triple leveraged inverse ETF. If the market goes down 1%, it'll go up about 3%. And so that is a great way to take advantage of general market weakness. These things are great if you understand how they work. And there's a couple of things you need to understand. First, because they're leveraged, they have to be rebalanced every day by the manager of the fund. And in doing that, if they are going against you, if the trend is going up and you're betting that the trend is going to go down, then they actually suffer the loss of value through sort of a time value decay. It's not really time value decay, but it's similar to that in an option. It's because of this rebalancing effect. And so if you're losing in them in the long term, even if the market goes to where you think it's going to go, you can actually still be behind because of this rebalancing. So my point in this is that you have to manage risk very effectively with these inverse leveraged ETFs. Now, the second thing we want to understand is the market moves in waves, and you don't want to chase the market higher. You want to buy the pullbacks. Now, human beings, we're sort of predisposed to fail in the stock market. We tend to chase strength. We want there to be some sign that we are right. So if we think, oh, I think the stock market's going to go down, you wait for it to go down, and in doing so, the inverse ETF has gone up, and then you buy the inverse ETF. Well, you're buying it because you've been proven right, but you need to buy it before you've been proven right. And so what I like to do is trade pullbacks in the trend. And so if we look at a chart here, this is the SDS. So this is one of those leveraged inverse ETFs. And instead of chasing it higher, this is a short-term chart. So this is a 30-day, 30-minute. So it goes up here for a day and a half. You don't want to be a buyer up there. You want to wait for the pullback and the break of the pullback and be a buyer there. Here you have a pullback, break of the pullback, be a buyer. Don't chase it when it's run away from the trend line. All right? So here you have a pullback, a break of a pullback. In the context of the longer term trend, if we were to look at the daily chart, for example, the longer term trend of the market was still down, which meant that the longer term trend of this inverse ETF was up. You buy the breaks of weakness. So even these little bits of weakness, buy the break. All right, so that's one trading strategy. I call that a pullback play. It's something I teach in the different courses that I do. Now, the other thing that you can do is buy when they break from low volatility. So the volatility ETFs like UVXY, VIXX, these ETFs go up when the volatility expands. When people think that there's going to be a correction, these things go up. And we had a breakout through some resistance from low volatility on those vehicles as a Friday. All right, and that's another way to trade them. I call those more like an abnormal break strategy. Again, something I teach in the courses that I do. All right, so how do we make money in alpha stocks? Well, first of all, what is an alpha stock? Alpha stock, kind of like an alpha male, they lead the pack. and you have the alpha dog. They lead the pack, right? With alpha stocks, the evidence that a stock is alpha is that it's trading with abnormal volume and abnormal price movement. These things can go up even if the market's going down, because they're going up because the market, or because that particular company has something good happening. So, the whole market could be going down, but if a biotech company finds a treatment for cancer that's effective, that stock's going to go up, and it's going to attract a lot of buyers, a big crowd of people, which causes the abnormal volume, which causes the abnormal price gain. Those are the clues of alpha. Now, if you follow that biotech company, you're going to know about it. But I don't follow anything. I follow the whole market. So how do I find these things? I run scans looking for stocks that are trading with abnormal volume, abnormal price action, and I trade them. I do that every single day. What are the stocks that are alpha today? And in this market, that's about the only thing that's working. Yes, you could short stocks in general, but you may as well just bet with the market, because those stocks generally are going down at the same speed as the market. So why not use those leveraged ETFs that go up when the market goes down? But to buy stocks in this market, you have to be in those stocks that are showing the alpha characteristics. We want stocks that surprise us with abnormal activity, and then we apply basic chart reading skills. So here's FUBO. Market's been going down, but all of a sudden this stock started to behave abnormally, and here the volume started to increase. You can see the volume there was higher than it had been going back a long time. You don't have to know anything about this company. What you can see is that the people that follow this company the closest were aggressively buying it. They probably had some great reason. I don't care what the reason is. I just follow market activity. And so you buy that stock in the $3.5 range. A week later, it's hitting $7 in a market that is ugly. And the reason it could do that is because it's an alpha stock. Now, I do that day trading as well. And at the end of the video, I'm going to show you the day trade of the week, and I'll show you the alpha in that again. All right, well, let's get into this week's market analysis on the markets that I love to follow. And we'll start with the S&P 500, which is a good proxy for the overall US stock market because it's a very broad-based index of mostly large cap stocks. And you can see here that the downward trend line on the 3-year chart is intact. We had a little summer rally there that brought us up to the trend line, and no surprise, it got stuck there. I talked about that being something that was likely to happen. It did it, and now we're back into the downward trend. So the trend is still down. I think that there's a pretty good chance we'll build a rising bottom. We may go down a little bit more next week, but if we can bottom out and then retest that trend line after making a rising bottom, then that is a good signal that the market's going to turn. But I want to be clear, that hasn't happened yet. It's like the hope, the dream. But based on seasonality, typically September is the weakest month of the year in the stock market, and you tend to base and move up sometime in October, maybe even November. So by a seasonality cycle, we should see that rising bottom build. Could be in September, more likely in October, and then the market starts to rally from November till May. Will it happen? I never do anything in the market based on what has happened in the past. I simply look for the evidence. And right now, the evidence is the market's weak. We're in a downward trend, and therefore you want to be cautious. Now, what is the short-term trend? If I look at 1 month, 60-minute, you can see that there the trend is down as well. Notice if you were to short the market runs down, pulls up, short the breakdown. Market runs down, pulls up, short the breakdown. Runs up, breaks down, short the breakdown. We had a little sign here that the market was trying to reverse, and then it failed when we had those bad inflation numbers on Tuesday. The CPI number is what put the market back into a bad mood. So we had a little bit of a whipsaw move this past week, but the sellers are back in control. Would I short the market now? Absolutely not. Why? Because we've already moved down a lot. You had to do it when it broke the pull-up, not when it's already gone down and the headlines are negative and everybody's crying like Chicken Little, the sky is falling, the sky is falling. You got to do it when the move starts. All right, let's take a look at the Canadian market. It's pretty similar to the US market. Here is the daily chart. Let's take a look at the 3-year weekly. And there again, you can see the upward trend has been broken. That happened a number of months ago. We're back into a downward trend. In that downward trend, bearish, Therefore, you want to be pretty careful in the long-term outlook. In the short-term outlook, we had that little bounce back. It actually broke the downward trend line. We had a bit of a false signal there that the market was going to turn, but now we're back into the downward trend and therefore bearish there as well. All right, what about oil? Let's take a look at USO and 3-year weekly. Here is our long-term trend. It is up. We are pulling back to the trend line. When we get to that trend line, the market will probably bounce off of that and start to move up again. The question is, if it does that, will it move up to new highs, or will it build a falling top and then break the upward trend line? I don't have the answers right now. The oil market in the short term is weak. It's probably going to bounce soon because we are getting back to that upward trend line. That hasn't happened yet, but that's what to watch for. And if it does, if it pulls back to that upward trend line and then breaks the pullback, that would be an opportunity to be a buyer of energy stocks, which have been beat up for the last few months on some profit taking, but the long-term trend is still good. Now let's take a look at the short-term trend for oil. And there you can see we've got falling tops, and that means the sellers are in control and therefore be somewhat bearish in the short term on oil. Gold made an important breakdown this week. Let's take a look at the 3-year weekly here. And I've talked about the support the last couple of months, and it was broken this week. So that's a big negative for gold, and it does look like it's more likely to go lower than higher. Now in the short term, you see that we're a bit oversold. The breakdown was there on Tuesday. We've already run down now. So you don't want to chase the gold market lower on the short side. You want to wait for it to bounce up and then break down. Those are your times to short. Here, when you get a break of the pull-ups, not when you're well below the start of the pull-up. All right, let's take a look at currencies. US dollar has been the hottest currency seemingly ever. You can see a parabolic chart here on the US dollar, and it hasn't broken that trend yet. It may happen soon, but until it does, you got to stay bearish. It's just very risky. I don't know that it can keep going up like that. Interest rates finally, actually let's do Bitcoin first. GBTC, important bit of weakness again this week. It tried to rally last week and it didn't really get very far. It stayed inside this pattern, and now we're back to the bottom of what we call a rectangle consolidation. This is the shape of a rectangle, and this low is lower than this one, so the sellers are in control. If we break down through 12, then we're probably headed to that $10 target that I've talked about many times. All right, finally now TBT is the proxy for interest rates, and you can see that it's been going up. We're at new highs. I think it may pull back in the short term. We may see this pull back a little bit. That would be supportive for stocks, which go into next week a little bit oversold. So we could see a little bit of a bounce back in stocks short term, a little bit of a pullback in interest rates and perhaps the US dollar short term. But the longer term trends still have a lot of work to do before that happens. So my ratings then, bearish on both time frames for US and Canadian stocks. Gold, bearish. Oil, neutral long term. It's pulling its way back to that upward trend line. Short term bearish. US dollar, bullish on both time frames. Bitcoin, bearish on both time frames. And interest rates, bullish on both time frames. All right, now let's take a look at the day trade of the week. And this is an example of one of those alpha stocks. I look for these every morning. I build a list, and then I trade them using different strategies. So AAOI showed very abnormal volumes starting at the open of Friday. So right from the open, it was trading abnormally. It gapped up on the open. This is a 1-minute chart. And then I look for what I call a pullback play. So I've got this little tool that I've created in TradeStation called my intraday pullback finder. And it's just an automated way to find this. So I don't have to watch every stock. The computer does most of the work. And if you're on my active live service, you watch my screen, we have these little alarms that ring when a stock triggers one of these pullback plays. So it made its first pullback play right here, and that's the one we're going to focus on. You can see here the time of entry, 9:55, so that's right there. The entry price, 306, so that's this. Again, this is all automated, and it calculates the number of shares and the position size for a certain risk amount. So we use $100 of risk just so that anyone can multiply it. So if you want to trade $500 of risk, then you would take this number and multiply that by 5. So your position size, instead of 900 shares, is going to be 4,500 shares. And instead of the position being $2,754, it's going to be that times 5. What's most important though is your risk reward ratio at the end of the day, or at the maximum. The maximum RR on AAOI was 8, and then at the close was 6.18. So that's where we get these numbers from. $618 profit, 22% return on a one-day hold, and that is a great trade. Hope you've enjoyed it this week. If so, click the like button, subscribe to the channel. Most importantly, trade well.